Welcome back. As you can see there, Dr. Okey Umeano is joining me. He's the head office of the chief economist at the Securities and Exchange Commission. Dr. Umeano, welcome to the program and Happy New Year.
Thank you,
We're
Nancy.
still in January, so we can,
yeah.
we can
Happy New
actually
Year.
say
Thank
that.
you, Nancy. It's always a pleasure to be here.
Likewise.
Yeah.
Likewise. It's good having you here too. We're talking about capital market outlook in 2023, but I want to start this interview by asking you, what is a capital market? Let me, you know, I'm as basic as I try to be so relatable on the show because a lot of people don't really understand the market jargons or the technical jargons that we talk about. So I try as much as possible for us to bring it down to the basics. So what is a capital market? Let's start from there.
Okay. The capital market is a market for long-term finance for the corporate sector and also for government. It's a place where companies can raise finance to, you know, expand business, do things, you know. Finance that is patient finance, you know, not money that they raise today like what happens in the banks and they start paying the next day. That market also provides what we call secondary trading. It provides liquidity for people who provide that initial finance. So assuming I buy a stock, for instance, the market allows me to sell it when I want and buy more and things like that. So market provides liquidity and makes it easy for money to go from the point of surplus to the point of deficit. Okay. And at the end, it makes the economy, you know, flow.
So in essence, the capital market could be divided into the primary market and the secondary market. Yeah. The primary market, which companies come to list and all of that, you have your initial public offer.
Correct.
Your public offer. Then the secondary market is the exchange, whereby if I want to buy a share or a stock of a company, there's a platform for me to be able to do that.
Correct.
So that is why it is important I asked that question for people to understand. So we're not talking something esoteric. It's actually simple. Don't mind all these economists with their jargons. You know. So, but you said something about the capital market making the economy flow. You mentioned it earlier. Why is our own economy not really linked to the capital market, unlike what happens abroad? The United States, for example, if the stock market moves in a certain way, there's trouble. If it goes up, okay, that means companies are doing well and all of that. But here in Nigeria is a bit different. Why are we not seeing that alignment? And is SEC worried about this, really?
It's something we work on every day.
Okay.
It's something, it's about market efficiency. It's about growing our market to the point where it becomes a reference point in the economy. For instance, our market is about $130 billion now, the market size. It's about $130 billion. If you compare it to our GDP, it's just a small amount. When I say 113 billion, I'm talking about the fixed income. That's the bonds and the stocks. If you take only the stocks, it's just about 60 billion.
That's very small.
So that's very small. That's just north of 10% of the GDP of the country, and that's why you're not. Sometimes you don't see the impact when something happens in the economy. I said sometimes because a lot of times we do see the impact. The thing is,
I'm not seeing it. Whether I need to buy additional glasses to see it well, because I'm not seeing it as it should be.
It's not as it should be, and that's one of the things we are working on. With our capital market master plan, what we want is for more companies in the country to be listed. So you won't see that impact if a lot of companies are not listed.
So
if a large chunk of the economy is outside the market, that's the problem.
Okay, now I get it.
Yeah.
That why we're not seeing that linkage yet is because businesses that
should be in the market are
not listed.
Yes.
Have you interrogated why? Is SEC also interested in the ease of doing business? Because businesses will be comfortable enough to come to list because there are also rules. You have the Securities and Exchange Commission. You have the sole regulator, which is also the NGX now. They must adhere to your rules and all of that. The ease of doing business for some of these companies aren't also too good.
The thing is, we are conscious of the ease of doing business. That's why we are getting better every day. We've introduced technology. We've made our regulations a bit easier. We keep innovating. We keep changing things to make the market more attractive to these people. And we even go a step further. We've been doing some advocacy. We've been visiting these companies and asking them, what is the problem? Why don't you want to get listed? What is it that is stopping you? Okay, I must say that this is not a problem only in Nigeria. There's this apathy that is going on around the world. But it does not mean that we will not do our best to try to get more people, more companies into the markets to get listed. We have very big companies. I don't want to call names, but we know the very big companies in Nigeria that are still not in the market. We keep telling them that, when you raise your financing from the capital market, like I said before, it's patient capital. So you're able to do much more. You're able to get bigger. And people, the people of the country, the residents of the country, share in the prosperity of the company, and have this attachment to the company, and the company does better. Okay. So that's the thing. That's the message we are preaching.
When you go and visit these companies, what are their reasons? What reasons do they give to you that, oh, sec, just hold on a bit, we are not listing now? What are the reasons until things like this happen? Okay,
so there are many reasons. Some of them talk about regulations. And like I said, we are addressing some of those regulations. And then many of those regulations are not even from us. Some of them are from their own primary regulators in some cases. Okay. So that's why we now are trying to bring regulators together. We have bodies like the FSRCC and a few others, where we are trying to bring people together to bring down these barriers that stop people. So regulation is one of them. The other way is the structure of the market. Some of these companies are so large, and they keep telling you that, oh, there's not enough money in the market for what they want. So some of them prefer to go to London, to New York to get listed. But we are saying we can't have the money if we don't have these people coming. And that's why we're also addressing another important segment of the market. That is the retail segment of the market, and then also the institutional investor side of the market. That's why we're also talking about the national savings strategy. You cannot have so much liquidity in the market if you don't have capital formation. So we are tackling it from different angles. If Nigerians are not saving money, if people don't have money to invest, how are you going to bring the money into the market for these companies to access? So at the SCC, our Capital Market Master Plan aims to tackle them from all the facets where the problem is.
Now, this is your master plan. I think 2014. If I'm not mistaken.
So this is the new one. Yes, now we had 2015 to 2025, but we revised it. So it's going to run now from 2021 to 2025.
That's the one that was presented to the Minister of Finance and Budget and National Planning. What are the changes in the master plan? Because I know, of course, that master plan has been on since Arumote days that she did it. So a lot of things have also changed. There was a pandemic now. Exchange was closed for perhaps like a year or so. So many things have happened. Some quoted companies even on the exchange may have delisted and all of that. So what are a few of the changes that the Securities and Exchange Commission have done to the master plan? Okay,
before I talk about the changes, the exchange closed physically, but the exchange kept working. Yes,
kept trading. Yes,
so Nigeria did very well. Yes. Our market didn't close for one day. Yes. So the Capital Market Master Plan, the revision was about, making the master plan in congruence with today's realities. Remember, it was a 2015 document, so we needed to bring it up to date. So what we did was the former master plan had 3 segments. It had the main master plan, it had the non-interest capital market, that's the Sukuk and all that, and then it had the financial literacy. So we brought them together. And then in doing that, we improved the structure. One other problem that one didn't have was I didn't have KPIs, key performance indicators, with which to check if those things were, the initiatives were being carried out, So we included that in this one. We also updated the governance structure for it, and also developed an implementation timeline. So we are now going to be checking every year, every quarter, every month. What are we supposed to do this month? Have we done it? What are we supposed to do this quarter? Have we done it? Something like that. So at the end of the day, we have something to judge ourselves, our performance by.
So how have you been judging yourselves? And do you give yourselves fair judgment? Or do you also bring like outside consultants that judge you people?
We do. We do. So
okay.
we
conduct
surveys.
You shouldn't judge yourself.
No. We conduct surveys. We conduct market-wide surveys and ask, what do you think about our performance? What do you think about our regulations?
Amongst
in the capital market.
Amongst the stakeholders
in the capital market. And we are open for investors also to, send us feedback and say, this is how, we think where we think you haven't done well, or where we think you have done well, or where we think you can do better. So we're open to all that. We are an organization that wants to keep growing, keep doing well. And of course, if we don't allow judgment from outside, if we don't allow comments and, from outside, then we may not do the best.
Do you think you've been doing well so far, at least in the last... you might tell me a yes, because you might be a bit biased. Since the last 3 years, I know that there is a new DG. He's not new anymore now. He's like, how many years? Like two and a half years, going to 3 years. I remember I interviewed him then, How do you think that you have done really in the past few years? And what have really been your challenges? Because I know you guys have had challenges. The pandemic caught all of us unawares and all of that. And some, I don't know if you've really, tell me how you've recovered, if indeed you have recovered.
Okay, thank you for that question. Of course, I'll be biased, but I also try to be objective. Okay?
I hope so.
Okay. I would use a few figures. So you said 3 years. Going back 3 years, we had what we call the collective investment scheme. So that's a mutual fund market. 3 years ago, the market was about the size of, say, 500 million. Today, it is 1.5 billion.
Naira or dollars?
Naira.
Okay.
Naira. It is 1.5 billion. So it has tripled in the past 3 years.
So people are more interested in alternative investment? Like
no, not alternative investment, mutual funds.
Mutual fund, that's the CI, collective investment?
The collective investment schemes.
So people are investing more in mutual funds?
Yes, because we've gone out, we've been educating people. This is a way to build wealth. The problem we had in 2008 was when people who didn't know how to pick stocks would just call their broker and say, buy this stock, buy that stock. Yeah. And then when the stock goes down, they blame the capital market. Yeah. But now we're encouraging people to come into the market through the funds. You have funds that cover equities, cover fixed income, money markets, and all that. So that's one segment of the market. The other segment of the market is the commodities part of the market. 3 years ago, we had just very little activity. So that segment of the market has been growing at least 500% every year in the past 3 years, the commodities part of the market. So where you have agricultural commodities, where you have minerals and things like that. We are positioning that market to be able to sell our minerals. We are beginning to see very good news from our solid minerals like lithium and all that. We are thinking that these things should be sold on our markets. So we are developing that segment of the market.
Okay, sorry to butt in because of what you said, the commodities market. Is the Securities and Exchange Commission working with the Central Bank of Nigeria on this? Because I also know that there was a time that the CBN governor did talk about creating a vibrant commodity exchange.
Yes, okay, I was going to say that. Okay. So the CBN is or has started to revamp the Nigerian Commodities Exchange.
It's
just one of the exchanges we have.
Okay. Yeah.
We have 7 commodities exchanges, and NCX is one of them. So CBN owns that. CBN has put in money there, is doing a lot to bring it up to standard. But apart from that, we have other private exchanges, and they are all working towards the same goal, which is we cannot say that we want to grow the agricultural part of our economy if we don't have a market to support it. And that's what we are doing. That market is growing in leaps and bounds. So that's another achievement. The third one.
But it's not, we're not, sorry to...
You're not seeing it.
Yes, we're not seeing the effect, especially on commodity or food prices. As it were, because what a commodity exchange should be really in terms of food, maize, whatever food,
correct.
We're supposed to see the effect.
Okay, so let me tell you how the effect will come. Before now, when we didn't have this market, or or let me say if there's no commodities market, what happens is that farmers are not able to get good price discovery for their products. So if you have a good commodities exchange, it helps price discovery, okay? And it also helps credit to flow to the farmers because there's good price discovery. People can now say, okay, if I farm maize now, in 3 months or 4 months, I'll get it. And this is the forward price. This is the price I think it would be. And based on that, credit becomes more available for me. So that's what's the value chain that commodities segment of market is opening up. So you will soon start seeing it. It's happening. But, you know, like I said, it's a new area. It's growing. And it's an area we are proud of. And I said it's growing in leaps and bounds. You can see the percentage growth that we have. But I must tell you that it's still a small market compared to the size of the Nigerian economy. But then they said the journey of 1,000 miles starts with a step. And I can tell you we've made many steps in that direction. Fourth one, I'm still analyzing our performance. One more. Well, let me just say one more. I can go on and on. The other one is we've increased the number of products in the market. Before now, it wasn't easy to hedge in our market. Now we have derivatives. We have started supporting also the non-interest capital market. So you can see we are now getting issuances in that area. So we are expanding the opportunity set for everyone. We're also involved in integrating the capital markets across Africa and across the West African region too. So we are a pace setter there, and we're also trying to expand what is available to people who are investors in Nigeria. So these are things we have done. I'm not saying that the SEC has done all that is possible to do, but I know that, you know, we're on track to doing it.
Do you think that the Securities and Exchange Commission is over-regulating the markets? What do you hear from your operators? Or they would not be, they will be afraid to speak to you?
No, they are not afraid.
If they are afraid, I will tell you.
Yeah, you will tell me. I know, Nancy. I do not think so. Why do I say that? When we have regulations, we share these regulations. Any regulation you see that comes out from the SEC has gone to the people on whom those regulations will be placed. So our rulemaking system is such that when we make the rules, we send it to them and give them weeks to go through and come back with comments and say, oh, A will not work because of this, or B will make it difficult for us to operate. So any regulation you see has got a buy-in of the market. So remember we have some mandates. The first mandate is investor protection. We don't joke with that. So if somebody comes and says, I want to do X, Y, and we see that that X, Y will not be good for the investor, it's our duty to, you know, not just stop it, but maybe amend it in a way, ask the person to amend it in a way that the investor is protected. We also have a market development mandate. The market development mandate means that we have to build the market. We have to help build the market. So we don't even have an incentive to overregulate. We don't even have an incentive to become an obstacle. I can give you an example. In fintech, we decided to change our role. We decided to redefine our role from that of regulator to enabler.
So what are you people doing with the fintech? Because
so what we did
there's a propagation of fintech companies.
Yeah. So for fintechs that are related to the capital market, a lot of them are related to the money market, to the banks. Yeah. But for those related to the capital market, what we are doing is we ask them to come in. No matter how outlandish your idea is or what you want to do, come in. What we did, we formed a new office. We created an office, Fintech and Innovation Office. What that office does is to listen to your business plan, listen to what you want to do, and look at the regulations and see how you can fit into the market. The office will look at the risk implications, the consumer protection implications, the investor protection implications, you know, and things like that, and direct the firm on how to operate within the set regulations. And many firms have gone through that, and they've come out now, and they are operating in the market. Some are still in the process. We have made it easy for them. We have even brought down things like regulatory capital requirements and things like that to make it easier for them. So we have taken on that role of enabler.
So the fintech companies that you people are working with now are fintech companies that are really linked, that do things that are related to the capital markets, like buying stocks for people. Okay, so
fintechs that are into they are brokers, you know, they are brokerages. They do the same brokerage business, but they are using technology. Those of them that are fund managers, they do the same fund management business that the traditional fund managers do, but they are using technology. those kinds of
like
things.
asset managers, those that
asset managers
into mutual funds and all of
correct.
that. Okay.
Advisors,
yeah.
you know.
Okay. So why I'm asking to get a full hang of what you're saying is because I've also seen people, for example, I was at a popular hotel here. I went for an event, and when I was leaving at the lobby, someone came to me with a flyer. I said, "Oh, Nancy, I need you to do this, do this." You know, just looked at the flyer. I just said, "Have you registered with SEC?" I asked that question, and the guy just flew away.
Oh, you see?
I don't know if you understand what I'm saying. Many Nigerians do not have that kind of information. So what is the Securities and Exchange doing to make people or Nigerians to avoid this kind of people? Because there are a lot of people that are also ignorant. And not everybody will know the right question to ask. Also, one day someone came to me, "Okay, Nancy, so people want to be on your show." I said, "Okay, fantastic. What do they want to do?" This and this and this. I just took it. I said, "Are they registered?" They said, "No, they have CAC, they have RC number." I said, "Guys, no. You can't do what you're doing right now without being licensed." And that was the last I heard of it. Not even saying they were going to pay me money and all of that. I said, "No, it is my responsibility to churn out right information, and I will not allow you to sit down here when I know that your business isn't too right." So what I'm going to essentially is, what are you doing to be able to educate people on this? Because it's critical, and also the part of the Ponzi scheme, let's put that, or the pyramid scheme that a lot of people do right now, and they say, tell Nigerians, "Oh, we have RC number, we are registered with CAC," and Nigerians just think that's it.
Thank you, Nancy, for bringing this up. This is an area that we are doing a lot and still have a lot to do. If you look at the Capital Market Master Plan, excuse me.
Sorry.
If you look at the Capital Market Master Plan, you'll see that a lot of the things we want to do revolve around investor education. Investor education. So, in investor education, what we tell investors is how to know who is genuine. And it's very simple. Just go to the SEC website and do what we call a CMO search. CMO search. If you type it in, the name of the firm that is marketing to you.
That's you type CMO search.
If you just go to the sec.gov.ng, you will see on the, you can just on the search portal type CMO. Okay. CMO, and the
capital market operators.
Yes, capital market operators.
Okay.
And the search portal comes out, and you type in the name of the firm marketing to you.
If it's
not there, it's not registered with the SEC. And if it's not registered with the SEC, you are not protected. You're not covered by that investor protection I'm talking about. So that's what we've been telling Nigerians. And that's why we've been telling those who are marketing financial products, investment-related financial products, you have to come to the SEC and get registered.
What
because it's even illegal.
Do you go to them?
We do. You know, last time I was here, I told you that we've been going around closing Ponzi schemes and all those illegal fund managers. And, you know, we've been on different stations. I personally have been on several TV stations, radio, newspapers, talking about this. We are about to, you know, launch a few billboards around the country now, you know, to set up a billboards around the country saying these same things. You know, Nigerians must understand that this money that they are giving people, it's difficult to get, right? It's difficult to you know, raise capital. And before you give it to someone, it's important to know that that person is the right person.
Now,
so that's the message.
The question is for those that have undertaken or have been involved in some of these pyramid or Ponzi schemes and they've lost money. The question is, how can those monies be recovered? What is the SEC doing about that?
Yeah.
Are you also working in connection with perhaps the EFCC, for example, because the EFCC is called Economic and Financial Crimes? Do you have a collaboration? Do you have a desk together, for example, and all of that?
We do.
Okay.
We have the SEC police unit, and they work directly with NFIU, EFCC. But the problem with Ponzi schemes is, remember what a Ponzi scheme is? They use the money from Mr. A to pay Mr. B, and use Mr. B's own to pay Mr. C. So at the time you close them, and while they are paying all that, they are taking their own. So by the time you close them, there's not enough money to return to the people whose monies they took. And you know, they promise outrageous returns. So, and these returns are paid to the first people. So
and the first people are now the advertisers and say that these are the things.
This is how much I got.
It's working, so go in there and all of that.
So that's the problem with them. So we have a few now we are trying to resolve, but I must tell you that it's difficult. for anyone who has put money in a Ponzi scheme to recover much. So it's important that
this
Nigerians
is not
understand.
Nice.
It's not nice.
It's not nice. So that means you should protect your money. Don't go
there. Don't put your money there. If anyone promises you a return that sounds too good to be true, it's probably not true.
But what about the consolation of getting the people that perpetrate Ponzi schemes at least to face the law?
We are doing that. We are getting some of them. We are prosecuting them. But right now, some of them have run out of the country. We have a few that are going through the process. But a few have run out of the country.
Is there a Securities and Exchange, EFCC, NFIU coordination? No matter where you run to, there's Interpol.
There's even an IOSCO agreement.
Yes.
We try. But the thing is, okay, there are a few now that we even have contacted Interpol with the Nigerian police, and they are being, sought after. Okay. So we think that wherever the person runs to, we'll still try to catch the person. But the thing is, don't even put your money there in the first place. That's the thing.
Okay, I guess we've spoken about a lot, really, in the last few minutes, but it's not ending yet.
Yes.
We have about 8 minutes or so. Let me ask you, the monetary policy, how does the Securities and Exchange Commission connect the signals from the monetary policy? And I know why I'm asking this. The stock market, for example, did fall after the May MPC's meeting when the MPC of the CBN started raising interest rates. And we've seen the movement of the market from that time till now. Even though the market posted about 20% return last year. So how is the SEC watching the CBN monetary policy, and how do you interpret whatever signals that come from there?
Okay, so monetary policy is an important thing to us because it affects the markets. Since May, the MPC has raised rates. We don't know what will happen tomorrow, but they'll be raising rates. So between March and today, we have a 5% hike in rates, in policy rates. That's a lot. That's a lot. And the effect on the market is that companies find it a bit more difficult to raise financing. Of course, and that because what is that stands for is to tighten the markets, and that's what is happening. And I must tell you that it's not a very good one for any business. But we also understand the position of the CBN. You see, inflation has been quite high. The last one was the December was 21.34%. That's quite high. Imagine that rates, CBN hadn't had this stance all this while. Imagine where we would have been. Ghana posted 53%.
54.
54, just about 54%. So you can imagine where it would have been. So we understand CBN's issues, but we also understand other things that are driving it. It's a supply side thing, the energy prices and all that's happening. But from our own point of view, we would prefer lower rates. That's our preference. But also we encourage our companies, we encourage everyone to continue to try to operate even within the situation. We believe that it might be bad first quarter, second quarter, but we believe that we'll recover. We believe
that's in the third quarter of this year.
By the third quarter of this year.
For the capital market, for the outlook
the capital market, and for the economy generally.
So we believe the third quarter
because the first quarter is now being influenced by the elections.
I was coming to that how is the Securities and Exchange Commission also watching the 2023 elections and perhaps the outlook? How critical is this year?
Yeah, it's critical. It's actually my job to look at that. Of course, it's an election year, and we know what happens in every election year. There's that problem. But there's one good thing that happens in Nigerian elections. Nigerian elections happen at the beginning of the year. So, like this year's election will happen, end of February, first week of March. So by the end of first quarter, we're done with elections. So we have time to start thinking about recovery from whatever happened during the elections. You know what happens during elections? There's a flight to quality by foreign investors. This time around, we're not feeling it like we felt it last time.
Why?
Because the foreign investors had already left due to the economic conditions before.
Yes.
Usually our market will have 50-50 foreign.
But now it's not like
it's like 20-80. So the impact had already been felt before. So we are not seeing that impact of the flight of these the foreign investors. Yeah, we're not seeing it now, but I'm not saying that the elections don't have an impact. They do. But I think that there will be time for recovery.
Are you also listening to the frontline presidential candidates, and are you getting a sense that these are market-friendly men? Because there's no woman, at least the frontline people, the first four.
Yes.
And is that giving you some kind of optimism?
Yes, it's. I listen to them, but I'm not going to say what any of them is saying.
Yeah, but at least.
But I've been listening. I've been listening to them. One or two of them are saying things that will benefit the market.
Okay.
So we hope that when the new government is formed, such policies, will be what we are going to see, and our market will benefit.
Now, Dr. Umeano, local investors in the capital market have increased from about 50% it was to 80%, as alluded by you now. How is the cost of living crisis impacting those local investors? Because I go chop belle full first. I go chop belle full first, like they say, before I have money for investment or for savings.
Yeah. So let me correct it. It's not just local investors. It's the proportion of investment that is from local people. Not
do
the
you
number
mean
of
local institutional investors?
Yeah, both institutional and retail, but more of institutional.
Now, the institutional investors too have individuals that perhaps buy their goods. You see the link now. So that's I know the question when I ask.
Thank you very much. That question is very important.
Do you understand what I'm saying?
Yes.
There's a link because you're talking about institutional companies that are listed and all of that, and these are people that provide products and all of that. Some of them are even doing sachets now. People are not able to buy. That's why I asked that question. How is that the cost of living crisis impacting?
It has a big negative impact. When unemployment increases or people don't have jobs, or inflation goes up and people's salaries remain the same, it affects us. Because people have to, first eat and provide for food and housing and all that before they think about investing. That's why we are concerned about the elections. That's why we are hoping that the people who implement the right policies come in. We are hoping that policies that will improve disposable income of Nigerian households will be put in place to encourage more investment in the capital market. So we are concerned about.
Okay. I also want to ask you this question, which is the market the way it is right now youth-friendly? And what is the SEC doing to make it more friendly to young people to come in even as retail investors?
Nancy,
because you see that a lot of...
This is a wonderful question.
Thank you.
Yeah, it's a wonderful question. I must tell you that the demographic in our market is graying. Youths are not coming into the market. So, and it's a source of worry. And that's one of the things we are covering in the Capital Market Master Plan. We're encouraging capital market operators to develop technology. The youths don't want to come in and start filling 5-page forms. They want to pick up their phones and they're able to make their investments. That's why we're improving our KYC. We're improving so many things to make it easier for them. And that's why we are introducing these fintechs. We are allowing these fintechs to come because we see the fintechs as an important gateway for youth to enter the market. So we are conscious of that and we are working towards it. And we hope that people like you would also keep talking about things like this. You see, the youths must understand that our market is a viable platform for wealth creation. You see, a 25-year-old, 22-year-old who just started working can begin to invest in stocks and create wealth over a lifetime, over a 20-year period. So youths in the country have to understand that. And I assure them that the SEC and the markets are working to know how best to serve them, to improve the way we deliver our products, to improve market efficiency, and to make the market attractive to them.
It seems that the more I ask you questions, the more questions I have to ask. It seems that from your answers, I'm getting more questions.
Yeah, it's fine.
And we've done 30 minutes or so, and we really have got to go. But I have more questions to ask, but I think we'll do it on another day.
That's fine.
Let's see how, like what you've said, let's see how these elections will go, the Securities and Exchange Commission, and in fact, global investors are watching to see what Nigeria will be up to by February and March. Thank you very much for coming.
Thank you very much, Nancy. It's always good to be here.
Likewise, having you. All right, that's as much we can take on today's edition of the program. I've been speaking with Dr. Okey Umeano, who is the head, Office of the Chief Economist at the Securities and Exchange Commission. You've heard it, the capital market outlook for this year, and some other questions that are really bothering your mind about what the capital markets is all about. I'll see you all again tomorrow with another topic, other guests, discussing something else in Nigeria. Be the best you can be and be the change that you want to see. I am Nancy Naji. Bye now.